Durham Region home prices saw some of the biggest gains over the pandemic. And as a result, we are seeing the biggest decreases in home prices from the beginning of 2022 until where we stand now, beginning of 2023. Today, I really want to zoom out on this price journey. We're going to look back over the last 10 years, what prices have done monthly. I'm going to really break down where we peaked in 2022 to kind of show you how far we've come down today. And I want to see, are we coming up on those 2019 prices, those pre-pandemic prices? So before we get into the rest of the video, let me know, do you think we are there yet? If not, how close do you think we are to pre-pandemic pricing in Durham Region? Welcome back to the channel, everybody. It's me once again, Rob Marsiglio, sales representative with Keller Williams Referred Urban, out here in Durham Region, serving the area, bringing you weekly content covering the GTA real estate market, hot news, stats, all that stuff, maybe a little bit of opinion sprinkled in there. Try to keep the sales pitch to a minimum though. That being said, if you do have any questions, there is a link in the description of this video that you can book a call directly in my calendar so we can talk about whatever you feel like talking about. Let's get right into the content of the video today. And what we're looking at here is a zoomed out, like I said, 10-year view of a monthly detached median home sale prices in Durham Region. So if we are talking about getting back to pre-pandemic pricing, that is right here. This is 2019. You can see the little run up we had in early 2020 here, followed by the fall off. This is pandemic. And then it was kind of onwards and upwards with a couple relative maybe plateaus, you could call them, throughout the years, followed by this most recent spike, which was the run up from October 2021 to February 2022. And then, like I said, that downwards roller coaster ride that we've been on almost coming up on 12 months now. What I want to focus on with you for the first part of today's video is kind of what happened across the four big Durham Region markets. So that's being Pickering, Ajax, Whitby, and Oshawa. Starting off with Pickering, and the reason we are focusing on the detached market, that's really what drives the other markets. So our detached, whatever's trending there, will trickle down into our attached market, will trickle down into the condo market. So this is kind of our best indicator of where the market is going. So this market peaked in January of 2022 at just over $1.5 million, fell off to just shy of $1.1 million. But you can see that the majority of that fall happened between January and July in Pickering. Saw a bit of an uptick in price and then a comeback down. So really the spread between July and December was about $60,000 one way or the other. The one trend you will notice across all these markets that we're looking at is that sales fell off really precipitously. Very, very slow fall market this year. If you're looking at this from a peak to December change, it was just shy of 30%, 29.3% in Pickering, and year over year. So going back to last December, down about 11.8% from where we were at that time. On to Ajax. Didn't peak in January, peaked a little bit later in February at just shy of $1.45 million for a detached home. Sales peaked in March. We had 126 sales that month. And again, down to $980,000. This drop off really fell the biggest from February to June. And then we kind of saw staying in this tight, like $50,000 range from June to December. You know, prices went up a little bit in July. Seeing these low sales numbers, though, there's going to be a little bit more fluctuation in the median sale price. All that being said, down about 32.2% from the peak to December and 18.3% year over year. A little further down the 401 eastbound, we got Whitby. 1.5 million was the median sale price in February. That was the peak. Again, sales peaked in March at 163 sales, and then we fell off to 1.06 million, we'll call it, over just 37 sales in December. The drop in Whitby happened a little quicker than the other markets. That was really from February to May that we saw the majority of the drop. You know, a bit of an uptick in June, but really we've kept things in a pretty tight, again, $50,000 window from May to December. From the peak, prices are down 29.6% in Whitby and year over year down 13.2%. The last market we'll look at is Oshawa. Again, broken record here, but peaked in February price-wise at just shy of $1.2 million. Peaked in March sales-wise at 279 sales, and now we are down to $830,000 as of December 2022. Did reach lower lows than that. Prices actually, bottomed out for the year back in July at $782,000, but you can see a pretty big drop, just like we saw in Whitby from February to May, and then prices more or less bounced up and down between that $870,000 and 782, but settling right in the middle at $830,000. That means a 28.6% drop from the peak and a 16.1% drop from December of 2021. So yes, I probably spoiled it right off the top, but we are clearly not back to pre-pandemic pricing in Durham Region. Just how much further do we need to go? Let's look at it from the region as a whole, and then we'll break it down by those 4 markets. Here's the chart that I showed you right off the top with a couple fancy lines that I put on there as well. This red line marks pre-pandemic pricing, I would call it. This is kind of what we saw for the median price point in 2019. That was $640,000. For Durham Region as a whole right now, as of the end of December at least, we're at $930,000. So that represents another 31.1% drop that we'll need to see in prices from today to get back down to where we were at in 2019. I think why this is so hard to wrap our heads around is because we've already seen the drop from this peak here to down here, and this represents a 30.3% drop in prices. So if you looked at the data just like this, it may seem unrealistic that we could potentially drop 30% more. But what I want you to do as a bit of a mental exercise is take out this peak, lop it off right around here. Let's say they had started raising rates maybe back when they should have in 2021 at some point and kind of cooled the housing market down at that point in time. I don't think it would have been as unrealistic to imagine a fall down from where we were at in kind of 2021 back down to maybe not all the way down to 2019 levels, but somewhere in this range, maybe a 25% from here to kind of continue a more gradual trend upwards that we did see. Now, per market, let's take a look. Pickering to get from where we're at in December 2022 to $785,000 is 27% drop. Ajax to get back down to $710,000 is a 27% drop. Whitby, the green line here, to get back down to $695,000 where we were in 2019, that's a 34% drop. And lastly, Oshawa, the black line, needs to see a 35% drop to get back down to $540,000, the median sale price for a detached home in 2019. So yes, I do think there's potential to get back to the 2019-2020 levels, but it really depends on sellers. First off, how motivated are sellers and how realistic are sellers when listing their homes? And one indication of how realistic sellers can be is property days on market. If they are listing realistically at something a buyer can afford, we'll see this property days on market be a little lower than it is right now. So I'd say that this year-to-date number of 22 property days on market, houses being listed for, 3 weeks, 4 weeks, is a pretty normal real estate market. You can see that for the year as a whole, Durham outperformed the rest of Treb. They were selling homes a little quicker, 5 days quicker all in all than we saw across the board. But in December, you can see that while the board it was taking 40 days to sell a property, in Durham Region it was taking 33. And to break that down by area specifically, Ajax 37 days, Oshawa 30 days, Pickering 31 days, and Whitby 28 days. So the first thing that I want to see is maybe these property days on market coming down a bit. That may give me an indication that sellers are a little more serious. That is the first number I'm focusing on. The second number that I will be keeping my eyes on is this one. That's power of sales. So again, scale on this chart, it's only from 0 to 5 mentions. What I did was on the MLS, I looked up how many times were power of sales mentioned in a seller's name on the MLS for new listings. So you can see that we haven't had too many forced sales. I mean, December of 2022, we saw a big uptick compared to November. We saw 4 mentions of it. Still nothing in January of 2023 with the spike for this past year coming in. This is April of 2021. So more mentions of power of sales in sellers' names on the MLS is signs of stress. If we see a ton of these come to market, this could lead to some further downward price pressure as well. Bottom line, affordability across the board is shot, whether you're talking groceries, whether you're talking fuel prices, just cost of living in general. And home prices really do play a part in that. In order to get to more healthy levels of affordability, we either need to see wages come way up or house prices come way down. And I really do think that the latter is a more realistic scenario right now, especially with this big fight against inflation. Anyways, before I get way too into the macroeconomics of everything, I want to say thank you so much for watching this video. I hope you found some value in it. I hope that kind of seeing what prices have done over the last little bit paints a good picture about what is realistic going forward for you. Once again, if you have any questions, please feel free to book a call using the link down in the description of this video. Until we speak again next time, which will be next week, please stay safe and cheers. Hey there, I really appreciate you watching this video all the way to the end. If you enjoyed it, I've got another video for you right here on the screen. And while you're here, maybe just click on my face, subscribe to. I don't want you to miss anything going forward.